Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals, and gold prices continue the trend lower. Gold prices we were talking just not too long ago about gold hitting 1,400. Then it was 1,300, and now we're kind of looking at 1,200 as our next key level. We didn't quite get there this week, but the trend, if the trend remains, we will get there soon. I think that right now the gold is basically an opposite trade from what we're seeing out of the dollar and Fed expectations, and there is nothing out there. No one out there really wants to hold and own gold at these levels with the idea that they want to likely see a bounce higher. I don't know if we'll get that in the coming weeks. We have a key Fed meeting in September. That could be the U-turn moment that we see for gold prices, because they need something. It's been the dollar bid has been just really taking the wind out of the sails of gold owners. We've seen them flee out, running to the exits, and ultimately, I think that as a gold bull that I am over time, these dips are opportunities, but I think that you got to wait until the momentum slows a little bit. The momentum to the downside remains very, very, very strong and hard, and I think that right now that's you got to wait and see where the dust settles. And flipping it over to the dollar, yeah, the dollar saw a major bid today. A lot of it was politically generated, and yes, a lot of it was going to come around whether you're looking into Europe and Turkey or whether you're looking at China. There were some key issues, whether it's been trade or whether it's been U.S. economic policies and numbers. There's a lot of reasons why the dollar's going higher, and the Fed, especially the Fed, and that has really been the key to the gold sell-off here that we've seen, because gold really has taken no deep breaths and sighed and seen a sustained trade sideways. We almost did. Up near 1225, 1230, but things really just kind of continued to collapse, and we make lower lows and lower highs on these weekly moves, and that's just going to continue until there's a reason not to. And whether it's the dollar, whether it's the Fed, whether it's some kind of geopolitical risk that is repriced, that's what it's going to take. And right now the trend in gold has been for lower prices. And if we look at gold positioning, those speculators that were pushing prices near 1350 not too long ago, well, they're gone. Long speculators are at their lowest level in almost 3 years. Dare we go into the spec shorts, something we haven't seen in a number of years in gold. So right now that is going to also be the key to any turnaround. Where will those speculators come in and take a risk and start to buy this? Into this week, we saw them continue to get out of their positions. Will that be the trend moving into next week? Has yet to be seen. So right now, gold prices not looking pretty, looking towards more downside push with more momentum. It will take the speculators to turn this around if and when they decide to come out of their hiding places. This is Todd Colvin coming to you from the floor of the CME Group.